Aveek Mitra is also joining us. Aveek, the investor community is waiting for a correction, and the markets are waiting for market men's patience to go dry. Who will win? The patience of the investors, or will the market win, the Mr. Market?
Good afternoon, Ajay. Thanks for calling me. First of all, I think the patience of the investor is not there because any kind of small fall, persons are actually putting more money than they were doing yesterday. So every month, if the flow goes up, so how can you say that investor patience is not there? So
That a lot of people are waiting on the side for markets to correct, and the way markets is trying to suck them in. You know, a lot of people I know in our circles, also common friends, sitting on reasonable amount of cash on the side, waiting for that nice correction, which is market is just not obliging. That's what I was meaning to say.
yeah, but continuous flow of liquidity will drive it up. Like the
Approaching, you've
smaller and
seen a lot
smaller
of cycles
investors.
yourself a week. How are you approaching things? If you get a good idea right now, a fresh good idea, which itself is becoming tough now, do you wait for it to scale back 20-25% for you try to time your entry in that idea, or you start buying nevertheless?
Yeah, so as we talked last time we were sitting on about 10-15% cash, but we deployed the cash actually post, at least most of the cash post election. And now getting idea and making big allocation is very difficult. So what we are doing is we are actually spreading our bets a little thinner so that we can get into ideas which are one beaten down and some into the areas which are having some momentum, and that way mixing and matching things. Not really sitting on too much of cash, maybe about 5 to 6% cash. And at the same time, we are not really having that kind of conviction that we will bet big on something, some ideas. So that correction can always be there. And another problem is the investor expectations have also gone up, right? The investors have got used to getting 50-60% return year on year. So that kind of management of expectation of investors is also becoming key. So we are not really sitting on cash beyond 5-6% at present. At the same time, we are not having a, you can say that chest thumping idea that okay, this is where we are making a high allocation. We are making very small allocations and spread our bets across.
Good point, Aveek. The idea in this phase of the market should not be, as they say, that go whole hog, but make smaller allocations so that the drawdowns can be managed. A friend of mine was just telling me that this is not the time to be a fund manager. This is the time to be a risk manager.
Absolutely, absolutely. So we are always a risk manager first and fund manager next. So that is how we have actually built up our client base without any kind of promotion and marketing. So people know that we manage risk first and then generate return, and we don't generate bad returns. So that has been proved over the years. So and we will continue with our
You're
strategy of
finding
investing according to the situation and quickly changing our stance when we find that the situation changes.
So you're finding value in chemical, IT, and pharma. Let's talk about pharma. What kind of pharma bets have you taken? If you could share any, otherwise categories at least, large cap or mid cap, India centric,
I am
CDMO.
not going to take, yeah, I'm not going to take names because recently our compliance team has cautioned me that don't take any names and be on the air on the safe side. And what I'm trying to see is that where all the sector is making some kind of changes where the companies, maybe it is in the mid small cap or even in smaller caps where the companies have made large investments and that investment can fructify over 2-3 years time. That is one area. Other area is that where the China plus one story may play out in the sectors of API. And third area is some kind of companies which were actually written down significantly over last 2-3 years. And people and were very discussed stock few years back. But we think that those kind of stocks have really come back. We have made an investment in one company based out of South on that, and that has already gone up 60-70%. but I expect it to do even better. Other companies which were making small investments are similarly a Hyderabad-based company, which were actually a talk of the town a few years back, then actually gone into oblivion or gone into consolidation phase. It always happens for companies that they reach a stage and then consolidate and then move again. So these three baskets, new investments, after consolidation, next leg of growth, or API business where we think that the situations will improve going forward.
What about chemicals? Have you started studying chemicals, and if yes, what category?
Yes, yes.
India-based, domestic guys, or export-oriented, complex kind of guys?
Yeah, all kind of things we have started, but most importantly, we are starting with the large investments has been made and investment has been completed, and we feel that capacity utilization will start quickly rather than actually bloating their P&L account by higher depreciation and higher other expenses and employee expenses and so. So those kind of sectors, we have made investments recently into one company who is into barium chemicals, and we have made another investments into a sector. I'm not exactly remembering the name of the sector. And we have also invested in some time-tested names like some large companies where we feel that the possibility of next leg of growth will come. Mostly, it is an export orientation, and where the Indian share into that basket of exports, imports into those countries can possibly increase.
I want to understand. We have. I want to understand that in IT, what's happening? 7% up move. The market the in TCS after the results. I mean, at least our reading was that the management was pretty non-committal on giving any outlook or any color, but the streets seem to have loved the numbers. I want to understand which part of the IT space will make maximum money in the next 2 years. Is it the complex niche guys, high growth guys, the mid tier ones, but many of them are no longer cheap, or what exactly will happen? Where is the alpha in IT?
Yeah, Ajay, I actually listened to this TCS conference call yesterday night, and what I realized is that situation is not bad as we always predicted, and this always happens, right? The situation is not as bad as people think, and it is not as good as people expect. So it was in between, and interestingly, they have also increased a little bit of manpower this time. So keeping all together, I think the worst is over. But I think this sector, at least the big players, will have a kind of problem in showing a big growth going forward for various reasons. Starting from the GCCs, which are actually started competing with them on their own ground, to AI, to new changes, some smaller players actually getting into niche areas and providing a very specific solutions. So those kind of things will always create a kind of a barrier to growth to large IT companies. So we are not really positioned into any large IT companies, but we always study the companies like Accenture or TCS to understand where the broad industry trends are there, and then we make our call on making investments. But our investments into IT at this point of time are mostly into the mid cap area, that also in some large portfolios. We are not really very big on IT in spite of this surprising or surprising market reaction to the TCS result. Maybe market has expected much worse.
Talk to me about when you look at your portfolio companies, what kind of earnings growth confidence do you have they will be able to clock next 2 3 years?
So it is very difficult to predict 2 3 years time, but we always try to predict that what is going to happen for next quarter, 2 quarter, 3 quarter, as per what the management guidance gives and or our understanding gives. So we expect at least we don't want to invest anywhere. We don't expect at least 20 25% growth in earning. So otherwise, it is very difficult to generate alpha in a portfolio level. So on that way, our portfolio position, we expect that at least our portfolio companies will generate 25% kind of an earning growth this year going forward. Now, expectation, so I think we can always be wrong.
Okay, among the large caps, where is the margin of safety in your view right now?
But yeah, I think that if you take a longer term view, I think there is a margin of safety They are from two aspects actually. One aspect is that the valuation comfort is there in sectors like chemicals, IT, some kind of even companies like in pharmaceutical, as I said. Other kind of safety comes from the growth prospects. There are certain newer companies where the growth prospect is so high and the market, the tailwind is so high and the runway is so big, so long that even though it apparently looks optically high, we feel that there are possibilities of the margin of safety is built into the growth, and also without diluting the balance sheet, then growth can happen. So if you look into margin of safety just from the valuation perspective of some financial component, that is one part. The other part has to come from your level of imagination about what are the future possibilities.
Just before we let you go, Aveek, any expectations from the budget this time around? How do you expect them to, kind of balance between requirement of growth, prudent fiscal management, along with now social compulsions as well?
Are you talking about the budget?
Yeah.
Yeah, so budget, I think, if you allow me to say a little longer, but I think the budget is a little overblown in India. If you look into this Indian economy, it is almost like 300 lakh to the 300 lakh crore to 325 lakh crore. The size of the total budget may not be more than 50 lakh crore and here and there. And out of that, maybe 30 lakh crore or 32 lakh crore will be government income, and rest will be covered through borrowings. Uh, I would expect that this fiscal consolidation, which has done over the years, are pretty good. Infrastructure spending, if it is continued at the same pace itself, will be very good for the country. But at the same time, I would like to see that how this infrastructure actually creates kind of employment or quality employment going forward, and what are the steps which are not really financial steps but policy steps and guide the legal steps which are taken to ensure that a lot of opportunities of generating employment are there, and also to ensure that red tape bureaucracy reduced, and we will look into this healthcare and education sector investments and things like that. I won't really look into particular number of whether this tax has been increased or decreased or things like that, but I would like to see that what are the new changes or what are the new reforms which are coming, which are brought into the policy level. As we keep hearing that this budget maybe the groundbreaking or some kind of high expectation has been built into it. So I would eagerly wait to see that what are those, and I expect those will meet my concerns of employment, education, healthcare, and things like that.
All right, Aveek, we'll let you go on that one. Thanks so much for your time.
If you like this video, then like, share and subscribe to ET Now.